You know the feeling, staring at your screen, watching a trade go against you. Again, the frustration wondering why other traders seem to make this look so easy while you're still struggling. Here's the truth. Scalping isn't complicated, it's just misunderstood. What if I told you there's one tool, just one, that can eliminate 75% of your trading losses and transform your profits overnight? I've used this exact technique to bank every single day for the last 6 years without using a single complicated indicator or cluttering my charts with hundreds of lines. I call it the purple profits, and it's ridiculously simple. In fact, it relies on just one line to give you everything you need to know. By the end of this video, I'll have a complete standalone strategy that you can use tomorrow to start capturing quick and instant profits in the market. You'll know exactly when to enter, when to exit, and when to stop out. Look, I get it. You probably heard big promises before, but this isn't some fancy system that only works in back testing or on YouTube videos. This is a battle-tested approach I use every single day to extract consistent profits from the market. So if you're ready to stop overcomplicating your trading and start seeing results, let's dive in. The only scalping tool you need, and the only scalping tool that I use, is called Purple Profits. Purple Profits will help you do the following. You'll find sniper entries, increase your win rate overnight, reduce your stress level, and you make money. If this sounds like something you want to do, please follow along. So what is scalping? So a lot of times when traders say, oh, I'm a scalper, I picture some dude trading SPX, massive size, scalping in and out for thousands of dollars. See, that actually doesn't exist in the stock market. So what is scalping? So it's quick in and outs. Okay, less than 30 minutes. This is not some hyper scalping strategy. So if you work a full-time job, you can easily do this from your office, from your phone, at kids' practice, whatever you want to do, you can do it. Okay, this does not require any sort of technology. You can literally do this with a phone while drinking mojitos on the beach. Okay, in scalping, you need to have a tight stop loss and defined risk reward. Okay. So when you're scalping, you are taking less profits than normal. So it means you have to have a tight stop loss. And you need to have a defined risk reward. You do not want to take trades that do not favor you in the long run. Lastly, consistent profits, okay? Scalping will help build your portfolio over time, okay? Over time. This is not a get rich quick and double your portfolio strategy. This is for someone who wants to pay their rent, mortgage, or groceries all from their phone in 30 minutes or less. So what does a scalp actually look like? So a scalp is pretty simply this, okay? The stock makes a move, pulls back a little bit, and we buy calls where we buy puts if it's bearish, and we sell high a day, okay? This is a scalp, okay? This is a 1 to 2 risk reward scalp. This is what it looks like. Now, before we begin, I want to make sure everyone knows that all of these charts are on the 10-minute time frame, okay? I trade a 10-minute and a 30-minute system, but when I'm scalping, I use a 10-minute time frame. There's no 1 minute or there's no 2 minute here. So what is risk reward? Risk is the amount of money you're willing to lose. Okay, reward is the amount of money you're being paid. Think about it this way, okay? In order to make money in life, you have to take risk, okay? If you have a college degree, you had to spend money in order to get that degree in order to get the job you're in now. However, college might be a scam nowadays, but that's for another video. RR, okay? So risk reward is written in RR, okay? And it's simply just the amount you're willing to lose divided by the amount you're being paid, okay? And the minimum risk reward is a 1 to 2. So that means every dollar you're risking, okay, you need to make $2. And I'm going to explain to you in detail why this is very, very, very important. Okay, so there's different types of risk reward ratios. I want to show here, okay, there's a 1 to 1. So that means every time you risk $1, you make $1. Okay, so if you're in the break even phase of your trading, this is likely you. Okay, now for any sort of profitable trader that's going to be doing this for as long as I have, you need to have at least a 1 to 2 or a 1 to 3. You can see, so this is the amount of money that you're risking. This is the amount of money you can make. Okay, amount you're risking, amount you can make. Now, this sounds really good, but don't you need a high win rate? No, you do not need a high win rate in order to make money trading, okay? With a 40% win rate, okay, which, mind you, if you woke up every morning and bought calls, okay, say it went 50-50, okay? Say the market went up 50% of the time and down 50% of the time. If you bought calls every morning with a 50-50 win rate, you would make money, okay? If you can flip a coin, you can do this strategy. So let me explain how risk reward works, okay? So we're going to take trend trades with a 2 to 1 risk reward. That means we're going to risk $100 to make $200. If you can only win 4 trades, okay, which mind you is less than flipping a coin, you will profit $200. Now, if you were to flip a coin every single day, okay, 50-50, heads or tails, so you just bet tails all the time, with this risk reward, okay, minus 100 to make 200, you would profit $500. Now, with a 60% win rate, it is now $800. And lastly, with an 80% win rate is now $1,400 over 10 trades. This is the power of risk reward. All you have to do is make sure that when you're taking a trade that you have the proper reward. You don't want to be in a situation where you're risking $100 to make $50, okay? Over a sample size of 1 million, that is a losing strategy. Now, let's get into purple profits. But before we begin, make sure you like and subscribe. Also, leave a comment down below. What do you want to learn next? Let me know. Now, I want to introduce to you my old friend, Isaac Newton. So, if you don't know who Isaac Newton is he's a scientist, okay? And he actually was the founder of day trading. I'm just kidding. No, this is an AI picture, and he clearly did not have stock charts back in the day because it was in the 1800s. But Isaac Newton invented something very, very key to how the world moves today. So Isaac Newton invented the laws of motion. So there's 3 laws of motion, 1, 2, and 3. So the only law of motion we really care about is the first law of motion. Why? Because it's number 1, so that means it must be the best. But you can see he invented a bunch of other fancy science stuff. I'm a day trader. I don't really care about science. But this is going to play an extremely important role into what we're about to talk about. So an object at rest will remain at rest unless acted on by an unbalanced force. An object in motion will continue at a constant speed and direction unless acted on by an unbalanced force. This is extremely key. I don't know if you know this, but this is how the algorithms are programmed. They are programmed with Isaac Newton. So knowing what we know about Isaac Newton and the first law of motion, what will stop Apple from going to the moon? So you can see we have Apple down here, and Apple is trying to get to the moon. But unfortunately, there is a UFO, okay, in the middle of the way. So what happens? So the UFO laughs, ha ha ha, and now Apple is no longer going to the moon. So now, here's you, okay? So you see this scary UFO, and Apple is not heading towards the moon. And what do? We have our magical purple net, okay? So we're going to catch Apple into our net, and then we're going to slingshot Apple back into the moon, blowing up the UFO and jumping for joy. Now, what happens when Apple gets to the moon? We make money. The UFO turns to dust, Apple lands on the moon, and congratulations, you just got paid. Ellie, what does this have to do with stocks? Well, let me tell the story a different way. So you can see we have Apple here is going to the moon. We can see the stock is super bullish and it's going to the moon. But now a UFO comes in here and does what? It crushes our price action. Therefore, Apple is no longer going to what? That is correct, the moon. So you have to come in here with your magical purple net here and do what? Slingshot Apple back to the moon, blowing up the UFO to get paid. Now, what's the catch? So you just told me an entire story about aliens and Apple going to the moon. Well, you see, this net right here that I put in all those pictures is actually the ADMA. Now, how does this actually work? How many times have you seen a stock just keep moving, right? The stock just keeps going up without you, okay? You've probably seen it in your dreams. However, stocks normally don't keep going up over and over without you. But I'm sure you felt FOMO. You're like, wow, Tesla and Apple are going to the moon and there's no UFOs to stop it. Did the stock go without you forever? No. Maybe the next day it pulled back, or maybe a couple minutes later. Maybe it dipped, or maybe it popped a little. Here's a law of price that no one will tell you. Stocks are always trying to find a balance between buyers and sellers, okay? If the buyers are winning, right, they're beating the sellers, therefore the trend is what? It's up. And you can see it's up based off of this graph. So remember this. Okay, but if sellers are winning, okay, the stock stays heavy. Okay, you ever hear that term before? It's heavy. That means that the buyers are losing and the sellers are winning. So stocks are always trying to find a balance. Now, if there was always a perfect 50-50 balance, stocks would not move forever and ever, aka that's chop, and that is no fun to trade. So before we begin, I just want to make sure you understand this, okay? So you're probably wondering to yourself, what is purple profits? Okay, so purple profits is when a stock is trending, a stock becomes unbalanced. So when you think of unbalanced, think of it as everyone's buying calls, everyone's buying puts, right? It's just like, all right, dude, like it's probably going to pull back and shake out all the FOMO chasers. Remember, 90% of traders don't make money, so therefore 90% of traders buy the top. So when a stock is super trending, okay, when it's really, really ripping or really, really just selling off, is it needs a resting spot. It needs to take a nap. Think about it. Stocks, it's really hard for them to move a lot. They get kind of tired and worn out. Traders lose interest in it. It's like, I think this is too high. So it's going to come down and find that balance. But you may be asking yourself, is there a place where stock rests that we can capitalize on? That is correct. You can buy stocks at this resting spot, aka the ADMA. Remember though, a stock can only trend, okay? There's no trend without this, so ignore everything if none of this is true. A stock can only trend if it breaks a key level, whether that's a pre-market high, previous day high, pre-market low, or previous day low. This is key moving forward. So here we go. We have two examples. We have a bullish stock and a bearish stock. You can see this is Apple, it's going to the moon, and this is Tesla, it's going to the gulag. Now, the stock becomes a little tired. You can see it's taking a little nap. It needs to take a rest, okay? It's just like your grandpa. He had a long day, gardening all day, so he needs to come down and take a little bit of a nap. Or maybe he just had too many beers. Whatever, you get the idea. Now, here is the key here. You see this little resting spot? You see this little lady, she's sleeping? Look, the stock came down and rested, and now it took a quick couple minute nap, and now it's back up. Same thing in the bearish case. Look, resting her head on the pillow, and boom, right back down. So here we go. Here is the risk reward. So you're going to enter off the first higher low, and then you take it long to high a day. Same thing on the downside. You enter right off the ADMA tap, and then you take it to low a day. This is good risk reward. You risked about $1 here to make $3. Think back to our example earlier. You risked $1 here to make $4. You can do this every single day without fail. So here is a more detailed breakdown on how to actually enter a bullish setup. So you're going to enter off the first higher low. What is a higher low? So see this low candle right here? Yeah, this candle wick right here is higher than this one, so therefore it is a higher low. Let me erase so you can see it better. Next, you're going to wait for it to come down and tap the ADMA. You see how it tapped the ADMA? Comes down, you take your starters, and then you add your full size here because now you have confirmation of the flag break. So where's your stop loss? Your stop loss is going to be the low of the previous 10-minute candle. And where's your target going to be? Very simply, your target is going to be new high a day. Let's look at a bearish example. Okay, so the stock comes down, it comes up, it taps the ADMA, it rejects. So therefore, once you see this rejection candle forming, you take your entry and then you sell low a day. Where's your stop loss? So since we're using a 10-minute system, it's going to take 10 minutes for this candle to form. Therefore, if you wait 5 minutes on this, you just set your stop right at the top and you just let it cook. Now, I want to cover a few more examples to make it very clear because this scalping strategy is extremely simple. Here we go. So now we have a stock. It is downtrending. Okay, you can clearly see it's going down and to the right. There's no buying calls here. What are we going to look for? So remember, okay, this is the purple profit. So purple profit states that we want it to come up and tap this line, and then we're going to take our entry. Here we go. So look, it comes up, it taps. Look, clear wick. Remember, when it has a top wick like that, it means sellers. Okay, there's sellers that are sitting in there. That is our confirmation. So we're going to take an entry and we're looking for a low a day. But Ellie, look at that candle. Yes, that candle, the one you're talking about right here, did not hit our stop loss, which is the high of the previous candle. Therefore, we stayed in the trade and we made money. Notice, when you have a predefined stop loss, we're not panicking, okay? We're not panicking that this got a little bit above the ADMA. We're not panicking. There's clearly sellers on the first tap of the EMA. That is our stop loss. That is our entry. And we're going to take this to low a day and we're going to get paid. Look, here's another example. Look how excited this stock is, okay? So you, being maybe a newer trader, you probably decide to buy calls up here thinking that you're going to make infinite money. However, the stock immediately pulls back after you buy calls. Have you ever entered a position and immediately a red candle forms and you're like, what am I doing wrong? Yes, it's because you are buying the top. You need to wait for a stock to rest in order to enter. So the stock is sleepy, but notice it did not meet our criteria for entry. It did not tap the what? The purple line. This, after all, is called purple profits, so you want to make sure you come down and tap the ADMA. Now, let's see what happened. Ellie, it actually didn't give you an entry here, and you'd be like, well, yeah, that's correct. It didn't give you an entry because it's a trick question, okay? This is a trick question. If you thought the entry was here, please go back earlier in the video and review what needs to happen. Okay, price needs to come down to the ADMA in order for us to even get involved. Okay, this is a floating candle, and this is where if you take this and scalp it to new high a day, you're going to get a wick and it's going to pull back on you. Okay, it's going to pull back on you. So notice, okay, you chased the entry up here and then it pulled back on you. But think about it. This is actually the resting spot. This is exactly how Purple Profits works. I am trying to wait for the sleepy spot. Okay, this is a sleepy spot. Okay, tap with the ADMA. And then I'm going to wait for that higher low to form, which is that higher low right here, because the wick of this candle right here is higher than this one. That is how a higher low forms. So I'm going to take an entry right there. My stop loss is going to be the low of the previous 10-minute candle, and my target is going to be high a day. And congratulations. Look, we did not get stopped out. We had a perfect A+ entry and we made tons of money. It's really that simple. Okay, I've explained the strategy before, and it's really a simple scalping strategy you can use to grow your account. Just keep doing it, stick to the rules, stick to the lessons, and you will be very well on your way. So how do the purple profits actually work? Step 1, you have to find a stock that's trending. Step 2, wait for it to get sleepy. Remember, you want to find that rest spot. Okay, that's step 3, buy the rest spot. Okay, the rest spot is the highest probability risk reward. Step 4, you're going to sell a new high a day or previous candle lows if you get stopped out. And step 5, you're going to tell your boss to kick some rocks, pal.